April this year, Black-empowered ICT company Business Connexion bought over specialised technology group Quad Automation for an undisclosed amount. Business Connexion says that the acquisition will allow it to target companies in industries such as manufacturing. Business Connexion has a market cap of 1.8 billion rand and a price-to-earnings ratio of 12. So, Paul, let's kick off with you. Business Connexion, one of those companies also looking to go into the cloud. Yes,
my manners are in the cloud. That's my new best line. Look, this is the old Persitel and QData business.
Yeah.
It's been keen to do deals for a while. You'll remember a couple of years ago they tried to get bought by Telkom because Telkom wanted to beef up in the IT consulting arena. That was nixed by the competition authorities, which I thought was a pity. Its earnings have been patchy over the years. But, you know, it's got solid presence in the cloud area, sort of hosting of IT systems. So it's a little bit neither here, neither there. It trades on a fairly modest PE, sits at around R4.70 per share. It hasn't done much as a share price, but earnings have kind of recently improved a bit. So it will do well, I suppose, if the corporate tech spend picks up. But I don't see that it's got a whole lot to recommend itself.
Okay, already not sounding too optimistic there. So, Craig, Business Connexion.
Yeah, look, I can echo much of what Paul said. I think new management came in August 2011, and now there's a lot of attention in terms of what they're going to be able to do, because we've had a lot of history with the company where they just haven't been able to deliver the management teams. In fact, ironically enough, they were tying up with Telkom at one stage. It sounds like a similar story. But I think that there is potential if you look at the last 6 months' results. So I'm not sure that I'd call it hot now. I'd like to see how the whole year looks. But I do think that we're going to see a lot more growth coming out of the share price. But I'd rather wait for it before jumping in.
Yeah, Paul.
Just one other thing is that some of the reason the earnings looked a little bit better is they acquired some assets from UCS, because UCS reorganized itself, which is another rival company in the same kind of space, and they picked up some good customers from there. But as Craig says, you know, you'd have to see whether it's likely that from here they can continue to gain traction, particularly in that cloud area.
Yeah, but that's interesting because you've got a lot of companies that are talking about the cloud and saying, no, we're going to get market share, and we're very excited because, we can actually be, front runners within the space. And we hear it from many companies. The question is, who's actually going to create
who's going to get those deals? Look, why I think it is beneficial for the IT consulting firms is that pushes the relationship one notch further into a dependent relationship with an external provider. So if you're doing everything yourself and you host everything yourself and you've got your own server farms and you've got your own IT capacity, like some of our banks and so on still keen to do, then obviously that doesn't give the consulting firms that much purchase. But once you let it all go, then you really are in their hands, and then the margins can tighten.
Okay, Craig, hot or not for you?
Not hot.
Not hot, nothing more to say.
Not me neither.
Not hot for you either, Paul?